I'm going to be completely honest with you. If you have your savings sitting in a Chase, Bank of America, or Wells Fargo right now, you're losing money every single day. And I'm not trying to be dramatic. I'm just talking about real money that you're missing out on. Here's what I mean. Let's say that you have $10,000 in savings at Chase. After an entire year, you've only made $1. One single dollar in interest. If you move that same $10,000 to one of the accounts that I'm about to show you, you'll have over $300 in that same year. That's $300. That's the difference between buying a toothpaste or paying your electrical bill just by changing where your money sits. So in this video, I'm going to break down 5 best high yield savings accounts that you can open right now in 2026. I will show you exactly what each one offers, which one is the best for your situation, and most importantly, which accounts that you need to avoid at all costs. Let's get into it. Before we jump into the list, let me quickly explain what a high yield savings account actually is. It's basically just a regular savings account, but instead of earning basically nothing, you can earn 300 to 400 times more in interest. So instead of 0.01% like the big banks give you, you're looking at somewhere between 3 to 4.5% right now. And here's the best part. These accounts are just as safe as your regular bank account. They are all FDIC insured, which means that your money is protected up to $250,000. So even if the bank fails, your cash is guaranteed by the government. Now you might be wondering, how is this even possible, right? How can these banks pay you so much more? It's simple. Most of these high yield accounts are from online banks. They don't have a physical branch. They're not in every corner. There's no buildings to maintain, no expensive rent to pay. So they pass on these savings directly to you in the form of higher interest. In addition to that, banks use the money from these high yield savings accounts in short-term and high quality securities that pay them interest. It's a win-win situation. Your money doesn't bounce up and down like the stocks. There's really no risk of you losing that balance. The only thing that changes is the interest rate, and that moves with the prime market. All right, now that you know what these accounts are, let's go into the best ones that you can open today. Coming in at number 1, we've got Signify with 4.5% APY. Now, Signify is a digital credit union that was launched back in 2025 by the First Entertainment Credit Union, and they just rolled out a savings account with one of the highest rates that you're going to find right now. What makes Signify stand out is that 4.5% rate. Plus, there's no minimums, no account fees, and some pretty cool features like early payday and digital budgeting tools. But here's what you need to know to qualify. You need to live in certain Georgia counties or in Los Angeles County in California. But there's another easy way to join. You can just join the Filmmakers Alliance for just $1. Now, there are a couple of other things to keep in mind. That Signify doesn't accept wire transfers, and they have a $25,000 daily limit on transfers and a $50,000 monthly max. So if you're moving large amounts of money around frequently, then this might not be the best option for you. But if you can join for $1 and you could just park your money to earn solid interest, that 4.5% is tough to beat. So if you want one of the highest rates right now, Signify is definitely worth checking out. Coming up at number 2, we have Newtek Bank with 4.2% APY. Newtek has been around for a while and they've been known for being business friendly, but their personal high yield savings account is actually really competitive. What I really like about Newtek is the simplicity. There are no monthly fees, no minimum balance requirements, and you can open up an account with just $1. That 4.2% applies to your entire balance. So whether you have 100 or 100,000, you're earning the same interest rate. They have online and mobile banking that's easy to use. And one thing that sets Newtek apart is that they also offer business banking products. Their business high yield savings account offers similar rates, and it could be super convenient if you want to keep your personal and business finances separate, but under the same roof. For most people, Newtek is a solid, straightforward choice, has great rates, no fees, and it's easy to manage. At number 3, we got SoFi with 3.5% APY. Now, SoFi is interesting because they're technically not a bank. They're a full financial platform. You can invest with them, refinance student loans, get a mortgage, and manage all of your banking in one place. With SoFi, you get a checking and savings account when you sign up, and both accounts pay you interest, which is rare for checking accounts. So here's where SoFi really stands out. They have this feature called Vaults. It's basically different savings account. You can create different buckets within your account. One for emergency, one for vacation, and one for down payment, whatever you want. Now here's how the rate works. It's a little tricky. The base rate is 3.3%, but new customers who open up by March of 30th this year can get a boost up to 4% for 6 months when they set up direct deposit. Now, to keep earning that 3.3% long term, you will need to have eligible direct deposit connected or $5,000 deposited every 30 days. Without that, your rate drops to 1.2. But they do offer up to $3 million in FDIC insurance through their partner bank network. So if you're looking for an all-in-one solution with great features and you can meet the direct deposit requirement, SoFi is a strong option. Now, before we get into number 4, I want to mention something real quick because I know the rates on these accounts change all the time. Banks constantly adjust the rates based on what the Federal Reserve is doing. Sometimes the rate goes up, sometimes they go down. So if the rates you see don't match the rates in this video, you know why. All right, so let's keep going because the next account might actually surprise you. At number 4, we have Open Bank with 4.2% APY. Now, Open Bank is backed by one of the largest banks out there, and they're offering a really competitive rate right now. There's no hidden fees, no monthly maintenance charges, and your money is FDIC insured. The only thing that you need to know is that there is a minimum deposit of $500 required to open up that account. But after that, it's pretty much smooth sailing. So if you have $500 to start and you want a solid rate without any complicated requirements, Open Bank is definitely worth considering. And number 5 on the list is Capital One. It is one of the few banks that offers a 3.3% high yield savings account and physical branch locations. I bank with them for money market myself. Most of these online banks don't have branches, and for some people that's a deal breaker. People want to have the option to walk into a bank and talk to someone face to face. Capital One has branches and cafes in certain cities like Boston. So you get the best of both worlds. Great online banking and competitive rates, and an option to visit a branch if you need to. Opening an account with Capital One is super easy. There's no monthly fees, no minimum balance requirements, and you can get started with any amount. Another big advantage with Capital One is that you can open up multiple high yield savings accounts for different goals with automatic transfer rules where you can pick a frequency, whether it's weekly or bi-weekly, and the amount to transfer into the savings account. You can literally just open up a second or third savings account with just a few clicks. Capital One also has great card products, so if you're already using the Saver or Quicksilver cards or their Spark card for business, keeping everything in one app is really convenient. So if you value having a physical location option and you're already in the Capital One ecosystem, the 360 Performance Savings account is a solid choice. But before we wrap up, there's something we really need to talk about, and which accounts that you should really avoid. Let's talk about the banks that are basically ripping you off right now. Chase, Bank of America, Wells Fargo, Citibank. These big banks are paying you 0.01% or less. So that $10,000 is just $1 per year. You want to avoid this as much as possible. Meanwhile, they're taking your deposits, lending them out at much higher interest rates, and making a ton of money off of you. And what do you get in return? You get nothing. So I get it. These banks are super convenient. They have branches everywhere. They have easy apps. You've been with them for years, but convenience shouldn't cost you hundreds of dollars annually. With high yield savings accounts, you get the same FDIC insurance, the same safety, but you're actually getting paid for your interest. And watch out for the banks that advertise high rates, but high requirements in the fine print, such as needing $5,000 minimums just to get the rate or requiring a certain number of monthly transactions. You always need to read the fine print. Make sure that you understand what you need to do to earn the advertised rate. SoFi is a little more complicated than Capital One, just to give you an example. If it feels a little bit too complicated, stick with the one that's straightforward option that we just covered, because 0.5% difference from one to the other isn't as much as a big deal. So that's everything that you need to know about high yield savings accounts in 2026. If you need help with credit repair, click in the link in the description to set up a free call with my team to see how we may be able to help you get these negatives removed. I'm talking about bankruptcy, late payments, collections, or charge-offs, so that you can get that loan, you can get that car, or you can buy that house. Subscribe and leave your comments or questions below.